There are key things that I look for whenever I want to analyze the chart. The first is to identify the key levels, identify the market structure, and identify liquidity. I'm going to show you how to do all of these in this video. But before going into that, if you're seeing me for the first time, what I basically do on this channel is document how I trade and as well show you the mindset behind my strategy. If you want to see content like this, I want you to smash the subscribe button. I'll be right back. I'm going to be analyzing USD CAD and as well show you how to identify those key levels, those market structure, and most importantly, liquidity in this video. For us to identify the key levels, we want to simply understand what the daily time frame is saying. Is it taking us to the upside or to the downside? Then we can be able to identify the key levels. So first thing first off is to go to the daily time frame and understand where price is taking us to. I'm going to be taking this trade this week. Now, for us to understand where price is going to, we want to simply use our support and resistance to understand the overall trend of the market. Where is price going to on the long run? You can clearly see that this point is a point of support. From here is basically support. That means price is currently at a support level, right? First touch, second touch, and we'll still have 3 to even more touches, which is very valid. Now, for every support, there is always a resistance. And here is simply the what? Resistance. Right? First touch, second, third, and fourth. Very valid resistance. So basically, having identified support and resistance, we can be able to tell where price is going to. We can clearly see that price is simply at a support level and price is simply heading towards resistance level. So basically, our bias on this particular pair is to simply understand that price is heading to the what? Resistance level, and we want to only buy. We want to buy to the what? Resistance level. But before we buy, we have to buy from a particular level or particular point that is a very good entry for us. And how do we identify where we're going to buy from? By simply understanding where the key levels are. So I'm going to basically remove these lines and identify the key levels. Right? So this point is our key level. This is the resistance key level here. This is the resistance key level here. And here is basically the support level. Our interest now is simply to understand how price is behaving at these levels. How is price behaving at the support key level and how is price behaving at the resistance key level? That should be your interest. That means all of those things we have seen previously is no longer important. The important thing is what price is doing at the key levels. For us to know what price is doing at these key levels, we want to simply understand market structure on the 4 hours time frame. That means the first thing we want to always do is identify these key levels, and secondly is to identify market structure on the 4 hours time frame. Remember, our interest is simply from this resistance key level here to this support key level here. That is basically our interest. All of the rest of the things are no longer needed. Now, if I look at this particular structure here, we can clearly see that price was basically on a downtrend from the resistance key level to the support key level, and our trend line can simply confirm that, right? This is basically what our channel is saying. That price is basically on a downtrend from this resistance key level to this support key level, and price is currently at the support key level, right? Now, for us to know what to do next, we want to simply identify the supply and demand zone that price created from this key level to this key level, because those supply zones are going to be our exit point. Now, the first supply zone we can clearly see at this point is basically at this point where price gave us this rejection here, right? This is the first supply zone. Now, the next supply zone that price gave us was simply here, where price gave us a drop, a base, and a drop. So this point here is simply a supply zone, right? And the third supply zone is simply here, price gave us a drop, a base, and a drop. So basically, we are able to identify 3 supply zones at this point here. Remember, price was simply in a downtrend from the resistance key level to the support key level, and we are able to identify 3 supply zones. We want to simply refine these zones to become point of interest, right? We want to simply refine these supply zones to become point of interest on the 1 hour time frame. That means on the 4 hours time frame, we are able to identify market structure and most importantly, supply and demand zones. Whereas on the 1 hour time frame, we're going to be refining those supply zones to become point of interest and most importantly, identify liquidity. Now, how do we refine these supply zones? For us to define supply zones, we want to simply represent these zones with a specific candlestick, right? It can be a dodgy candlestick, it can be a shooting star, it can be any of these candlesticks that you choose to, right? For me, I'm simply going to be refining this particular one here with this particular candlestick here, right? All of this little candlestick here should be what I'm refining into. So basically, these are supply point of interest here. Now for this one, I want to simply refine this one to become this particular candlestick here, right? So this is our what? Supply point of interest. And we'll have the last one, which is basically this one here. And I'm going to be refining with a particular one here, right? This dodgy candlestick that appear at this point here. So having refined these supply zones, we want to simply understand how price behaved at the first supply zones to know if price is going to continue to the downside or price is going to continue to the upside, right? And what did the first supply zone do? When price got to the first supply zone, right, at this point here, it reacted and then failed. So right here, the first supply zone has failed. And what I want to basically do now is to refine the supply zones now to become a flip zone, because once a supply zone fails to hold, it now reverses and become a flip zone. And if you can clearly look at this point, you can clearly see at this point also is already printing a demand zone, which will have a rally, a base, and a rally, which is a very valid demand zone. But again, price failed the first supply zone that we identified at this point, causing it to become a flip zone. Now, if I refine it to become a flip zone, you can clearly see that this point here is going to basically be our new demand zone. This whole point is basically going to be our new demand zone. This whole point is basically going to be our new demand zone. Now, how do we know if this demand zone is going to hold or not? We want to understand where the liquidity is. There are basically about two types of liquidity. We have the equal highs and equal lows, and we have trendline liquidity. So once you identify a point of interest, for that point of interest to hold, there has to be liquidity that will allow that point of interest to hold. In this case scenario, for us to buy from this zone, we want to simply see price induce liquidity and then price sweep liquidity before we take an entry. Now, having identified this point of interest at this point here, we want to simply identify the liquidity, right? Remember, ordinarily this point is basically a demand zone, rally, a base, and a rally. But remember, I was able to identify this zone from the flip zone that price created on the supply zone, because price was basically on the downtrend. Now, in this case scenario, we identified that price is basically about to start going to the upside, but there is no confirmation yet. Price is basically ranging, right? Creating equal lows and equal highs. In this case scenario, for us not to do next, now I want to identify where liquidity is and be able to know what we're going to do next. And remember, I told you that there are two types of liquidity: trend liquidity and equal highs and equal lows. In this case scenario, we're able to identify an equal highs and an equal lows. And where is that equal highs and equal lows? This point is basically the equal lows. This is the equal low here. And right here we have relatively equal highs here. Relatively equal highs. An entry on this particular page to simply wait for price to open tomorrow will be Monday. And what I want to see price do is this. If price open tomorrow and start heading to the downside, then we're going to look for buys, because price is basically going to sweep the liquidity, the sell side liquidity, so that price can grab the buy side liquidity. So basically, an entry on USD card is to simply wait for an opportunity for price open tomorrow, be Monday, sells to the downside, then we can look for a buy opportunity. So an entry like this is going to basically be like this. An entry at this point here, and our stop loss right below this swing, which is exactly 20 pips. Not risking much. 20 pips is not too much to risk. Now, our exit is going to either be as this swing high here, as our TP1, and Here will be our TP1, and most importantly, we can be looking to target this place as our full TP before the week runs out. So basically, an entry on USD card is to look for a buy opportunity if price sells to the downside on Monday. Remember, we're only reacting to the market. We're not predicting the market. Now, I'll give you another scenario. If price open tomorrow being Monday and price begin to buy to the upside, if price open tomorrow being Monday and price begin to buy to the upside, then we're going to be looking for a sell opportunity. Now, our entry is going to basically be like this. For us to look for a sell opportunity from this level and target this here as our TP1 and maybe probably here as our full TP. Remember, we're only reacting to the market. If price open tomorrow being Monday and start buying to the upside, then I'm going to be looking for a sell opportunity for price to carry this liquidity and fill this imbalance here. This is because most times price have to make a fake move to take out liquidity and price have to make an actual move to grab liquidity. So basically, my overall analysis for USD card is to simply wait for price to open tomorrow, being Monday, sells to the downside because I can see plenty of liquidity at the downside here because price is likely going to sell to the downside because of the liquidity that's plenty here. Price is going to sell to the downside, then I'm going to look for a buy opportunity to this high here. That will be all for GSD card. I will see you in the next video. Peace.